It's lovely to see you almost close to 20 plus over here. I think more will be coming in very soon. So while we continue to wait for the others, we'll kick this off with a good introduction. So welcome back to a Get Set Up Franklin Templeton joint class and a learning at Get Set Up. A lot of you all are new members, as well as a few of them are regular. So for the regulars, we don't need any introduction, but for new members, welcome to Get Set Up, an online platform to engage and learn from your own peers. We are on a mission to help those above the age of 55 to learn new skills, connect with others, and unlock new life experiences. What we do is that mainly our goal is to reduce isolation and equip the community with the tools and knowledge to age independently in place. Our community engages in classes online as well as through offline activities like traveling together over longer trips as well as short day trips. So, what are we going to do today? A topic of very much in discussion for the last many months. And if you actually go back, it's been generational of conversations in the Indian household specifically. So it's about gold and why it could be a risky investment, the modern gold investment. So we'll dive into that in a bit. But what we're going to learn today is the various modern gold options, which will be explained by our speaker. Understanding the gold ETFs and the digital gold, as well as fractional gold ownership, and how these differ from the physical gold that we all have been used to for generations. What are the benefits of gold ETFs and the digital gold? We'll discover here how these options provide easy transaction and low storage costs. And boosting portfolio stability, see how adding gold as an investment can strengthen and diversify our retirement portfolio. And the risk awareness as well to understand the various risks, including market fluctuations, the fees, and the security issues to make more informed choices by our members. A bit about, can we just, Tina, keep changing the slides, please? A bit about Get Set Up has already been mentioned. Can we go into the next one? A bit about our sponsors, Franklin Templeton. It is one of the largest asset managers globally with over 76 years of experience. Tina, can you change the slide, please? With over 76 years of experience and currently managing assets globally to the tune of USD 1.63 trillion as of October 31st in 2024. FT or Franklin Templeton has been part of the Indian mutual fund industry for over 28 years. Franklin Templeton India offers a diversified bouquet of products spanning equity, debt, hybrid, and international funds, which may help the investors to meet their financial goals. There's a rich history of being pioneers in many ways, like introducing the concept of SIP, which we all talk about every now and then in the Indian mutual fund industry. The global parentage and local expertise position FT into a way uniquely delivering value to investors. Going on to our eminent speaker, Sunilji, most welcome back again at Get Set Up platform. You've been a partner, and just a bit about yourself and your introduction. You've been in the business for 44 years with experience in financial services. You've been focusing on operations and financial products marketing, as well as regulatory and compliance. So somebody we can learn a lot from. You have delivered corporate training, as well as have worked in various financial markets, insurance, and working with institutions like Canada and ICICI Bank. You specialize in soft skills and transformation training. You have an extensive experience in wealth management and compliance, handling high net worth clients, as well as ensuring regulatory adherence with NSE, BSE, and NSDL. And you've managed organizational transitions, including overseeing branch mergers and the shift from manual system operations, as well as in the entire banking sector. So I think with that, we can dive into a conversation with you, Sunilji. Very nice to see our regular members back again, as well as some new participants, to understand from you what this topic actually means and what are we going to cover today. Especially the part, what was interesting for me to see is that is it a risky investment? And that's something which I think we'd like to hear from you. Which part of the risk are we talking about over here? And if you could delve into how gold can be a good balancer of portfolio during our retirement days, and with many years of experience that you have managing your own retirement corpus, it'll be nice to hear from you. Sunilji, over to you.
Thank you very much, Ashwin. Thank you very much. And to be very frank, the gold word simply fascinates us a lot. and we people at a time do buy certain physical goals. And the title today we have just made is why we are putting our investment at risk when we invest our things in gold. So very simple thing is investment will always be at risk because generally we invest in physical gold only for one reason, the jewelries. Sometimes the happy moments are there. Sometimes we are having the weddings in the family or any other thing. We go for the physical gold and that thing ends up in our homes, vaults, or particularly in the bank lockers. And when it is in the bank lockers or when it is in the vault or in our wardrobes lying there, so as far as the investment part is concerned, we know there are no returns as such. And generally in our parlance, in our technical word or other financial word, we know it as dead money. Dead money is that where we have invested our money, but returns are not coming to us. And gold is simply that. But simple thing, as I just shared with you, and Ashwani sir was there, it has been a trusted asset for centuries. People go to buy gold, physical, physically they buy all the gold to keep in the lockers, that too in the shape of jewelry, and not to it's the purest form, that is 24K. Now, as far as our country or particularly the Asian countries are concerned, we go with the jewelry. And if we treat this particular part as a last resort of money when we really need some money for certain other emergencies or something like that, till that time we simply try to arrange from other sources till all are exhausted, then we go for this gold to be sold out. But again there is one thing, we are not selling our gold, the physical gold, but we simply go for pledging of the same and get some credit facility against the security of our jewelry. And with that, instead of getting returns, we are paying something more on that. We are paying interest on that. So instead of earning income, what we are doing? We are not earning any income, but we are spending and our expenses are moving further. And that is why the physical gold, as far as nowadays, is not basically an investment or even I would say the protection. But as we all have got modern, we all know, and the investment part, our investment part is very simple. Modern techniques of investments have already changed. How we have to have returns from our investment, and that too people believe that we should have good or better returns from our investment. And that is why that's when I take the word gold can also be uh, an asset which can be there for you to giving the returns as well as earning money as of appreciation. Now, just to make it a very simple statement, in the last 1 year or 1.5 years, the gold has given more than the when the people have invested in the equity. Now, in the turbulence period, it's the very simple quote is there, the prices of the gold are inversely proportional to our stock market rates. When I say when generally the stock market goes and people start in panic, they are selling their all holdings, so they start investing in the gold. And gold becomes a costly, and that is why the appreciation can happen in that. But again, physical gold is not the right thing as of now, today, to have the returns, and we have got options for that, that is gold ETF and the digital gold. So I will share with you the gold ETF, what it is, digital gold, what it is, and what is the difference. Yes, sir. Yes, Abhishek, sir. Ashwini, sir.
No, interesting. I think what you basically have summarized so far is that it is a good investment opportunity, and you're just about to kind of start off on that line of conversation. But what you're trying to highlight and what you've highlighted so far is the part about as an asset class. there are more efficient, modern ways of still taking that as an investment option, which we will just lay out the benefits, etc. So I think that the risk part of it is well understood now. So it's an important asset class, and now it's in the modern time there are better ways to still take exposure. Oh, back to you. So far it's been helpful.
Okay, sir. So as far as the risk part, I will just try to convert in my next discussion ki how this physical gold and the ETFs, what is the risk value in both. So let us first understand what the gold ETF means. Now, when we say ki when we are going modern and we are going practical, so now this gold we can purchase as a simple paper which is totally intangible. We are not able to touch, feel, but yes, we are having that gold. Now, this gold ETF, which is exchange traded fund, exchange means it is available in our stock exchanges. It is through the fund houses, they are dealing in it. So exchange traded fund, once we have invested, and these can be held in our demat account as certain number of units. As far as to understand in a better way, 1 unit is general equal to 1 gram. Now, something people will try to ask the question, the same question, कि if we purchase gold and that is showing in my demat account as an unit, so what is the security? Now, whenever this gold is ETF we invest, the equal amount of physical gold is kept in the safe vaults by the concerned fund houses in their vaults, so that the rates of the gold which are available in the stock exchanges are almost at par. Now, what basically is the difference between this? The gold ETF gives me the risk, or there is no risk. Risk only the fluctuations in the market. And that risk will come to us when the demand and supply, when the demand of that in the functions or the weddings or the celebrations happen. So it depends on the demand and supply, but the units which we are going to buy, it comes from the market. It is not as such that one can whims out. The second thing, okay, what is the rate of the gold? Yes, we are very sure. And the second benefit is of the purity. Second benefit of the purity. Now, purity is a big concern when we buy the gold. Now, when we go for say 24K in the market buying the jewelry, that is not available, and we have to totally depend upon the trustworthiness of the concerned jewelry, which is our traditional jewelry for all the families. But in gold ETF, it is 100% 24 karat purity of the gold which is available. 24 karat pure. So that is the first thing. Okay, we are investing in such a class asset which we know it is as pure as such. Now, in this particular thing, another thing is the affordability. Now, suppose I have to buy some gram, 5 gram, 10 grams, and that may not be available. I am not having that much of amount. Affordability here simply is कि where we can have the benefit of this gold as far as the value and the returns with a smaller amount. And even a 1 gram of unit, that is 1 gram, which is equivalent to 1 unit, we can invest our money and that unit will reflect in my demat account statement as an holding. So it means the person who may invest 5,000 a month or 10,000 or 8,000 as an SIP. SIP simply I would like to give in a single line statement okay, where we are going to invest something in a very systematic way. Systematic investment planning, and if I decide okay, I am going to say put 5,000 or 8,000, 10,000 in a month, so if I buy 1 gram of unit per month, suppose, and in a year I will be getting around 12 grams, which may not be possible for me, which may not be possible for me to go and buy in the market. Because 1 gram, 2 gram jewelry, and that will be around 22 or 18 carats will be available. The purity is a big question. But in this market, we get the purity that reflects in the market, that is the affordability. And another thing is, whenever I need it, As far as physical gold is concerned, I have to go to the jeweler. They will tell that this is not pure, this is impurity, this is something like that. But here, I can sell this gold on the stock exchange and get the money, and can buy the things as per my choice at any time when we require the most, or if we even do not going to buy the gold for any other exigency which is required, it will work just like a physical gold. Moreover, in the physical gold we go to buy, we have to pay certain GST. But here, there is no question of any GST when we keep it in our demat account. And when we sell it in the exchange, there is again no GST. So tax, we save our tax as well. So here, the two things which I just shared with you till now, the affordability, okay, we can go and invest with a very small amount. Second, the liquidity, we can sell it any moment, anywhere. And the third is the risk. Now, physical gold, if we keep in our homes, there is always a risk of it being stolen or something like that. But when it is lying in the demat account as a unit, there is no such as risk, and we are free of that tension or that stress. So affordability, liquidity, purity, and risk as compared to the physical gold, we are much better placed here. Another thing is, yes, sir.
No, you continue, and then I can just pause at the moment. So you were saying another thing, and let's finish that, hear you out, and then I have a few thoughts and comments around it.
Okay, so as I was telling you with that, then another thing with the gold is basically because it is stored and it is in my unit. So we all know that there in our country the inflation is a big risk which eats out our returns, and the real returns do not happen many a times. So if we are putting our money, sometime many people, particularly the senior citizens, they put their money in the fixed deposits. Fixed deposit returns are, I think, 7 to 8% as of now, but inflation comes about 5 or 6%. That says so real return comes only 1%, and we are paying TDS on that as well. Or if the interest is more, so as per our income tax slabs. So in this scenario, what we are doing, we are getting the gold, we are selling the gold, we can use without any risk, without any liquidity, and purity as far as is not a concern. That is the best part of the gold ETF. So we have to have, yes, sir. Ashwini, sir, you.
Yeah, no. So I think it's well understood so far that it is an important asset class to consider, especially against inflation. As people who have been attending our financial classes and learning lessons for a while would realize that we have always been maintaining asset allocation strategies. So this is one of the asset allocation strategy that gold can be invested in uh, to take care of inflation. However, because of the market risk, anyway, it has any investment do have market risks behind. So one needs to kind of regularly evaluate at every point of time, which also at the Get Set Up classes we have regularly mentioning that to our community. But an interesting part that you bring about is that why it is an important asset class. There are better ways of making that an investment versus consumption is take it in a paper form, or next cover that you're going to do, take it in a form which is far more liquid, far efficient, still tracks the exact prices in the market, and more importantly, the term that I was going to use is financialization of real assets. Very recently, one community member of ours reached out to me and said that should I just get out of physical gold bars that are lying in my safe, which you call is a dead money, or jewelry, which is again and convert them into an ETF or digital gold. And I said, yes, you should have done that yesterday. Only basically saying it, do it as fast as possible, because financialization of assets is a far efficient way of holding any of the investment opportunities, which is why we are seeing a huge change in everybody's attitude to convert things into demat form. So dematerialized at demat form. So back to you to try and understand what is another way of looking at this asset class in some other efficient ways of still having the investment, but at the same time not having to worry about storing it, not having to worry about the size of investment. As less as 1 gram can be taken as an investment, so you can start small as well as still managing to do it in a systematically way by regularly investing it on a certain date, certain month with regularity of investment. So back to you to understand some of those concepts as well.
Okay. So as I was sharing, every month we can put something, and every year or after some years, you will see that you have got certain units of paper gold which are equivalent to grams, and you can just liquidate them off as and when you are required. As Ashwini just told me, that there was one who was having a bar and is keeping in the vault. And when we are keeping in the vault, we are paying charges again for the safekeeping of that. For the safekeeping of that, we are paying charges. So it instead of earning, we are making some sort of a paying to chokidar so that he can safe keep my the things, but that is not required. So as of now, it is the paper thing which we know as paper gold nowadays, which is equivalent to just now physical gold. Nothing less than that. It is nothing less than, but I always say it is more than that because I am free of each and everything. But one thing, as Ashwini just brought out in his discussion about the market risk. Now, what market risk will always be there in each and every asset which wherever we invest our money, wherever. So it can be your real estate, it can be your equities, it can be any bonds even which carry fixed rate of interest. Each and everything has got certain, even in our life, if we are moving out of our house, we are taking a transport, risk is always there. But thing is there, when we have invested in a certain class, and we have invested our hard earned money, so it is always better to evaluate its performance. Meaning thereby we have to monitor and supervise what my investment is, what it is giving me, is it coming to my expectations, and each and everything that has to be evaluated regularly, say within 3 months or within 5 months or even within a month when the market is speculative. So as of now, we are seeing the market is totally in turmoil. From that 85,000, the Sensex has come down to 77 or 78, something like that. Almost 9 to 10% it has slide down. But gold remains unimpacted. So as I told you in the beginning, it is simply an inversely proportional to the market trends. If the market is moving down, it will go certain and certain. And one thing is very clear. And when we say uh, if the things are moving down and down for us, it is the one thing which will always go up because commodity is scarce, supply is scarce, but demand is high. So always remember that this is the safest mode, and I understand as of now that this thing is going to give me the returns which we have seen in the last 1.5 years, approx 20%. Now, there are something more than that which we know as just related to this is digital gold. Gold ETFs, we can go to the stock exchanges, we can have a trading account, we can have a demat account, and we can buy it online through the stockbroker. Now, coming to the another part, which was the highlight of the beginning, that the digital gold. As we understand what this digital gold is all about. Again, this is just like a physical gold, but again, we are not storing it physically. And how it is different from the gold ETF, and as far as I am concerned, why I prefer this gold ETF instead of digital gold. So all the things are here. Okay, this is quite convenient to buy and sell, but not on the stock exchanges. We have to find out some online platforms which deal in this. One or two banks deal in it, otherwise just one was there, Amazon and other online platforms are available to buy it. And we can again buy with a small unit. Here not an SIP is there, but we have to give some money and they will buy on my behalf, and that will be stored in the vault. Second is, in the vault, purity is guaranteed, security is there, liquidity is there. But liquidity here is somewhat different. Now here when I am having that physical gold there, when I am having that physical gold there, when I am having that physical gold there, so it does mean that I have to make a request on that online digital platform for getting it redeemed. For getting it redeemed, so I have to submit the request. I have to submit some KYC documents, and then that will be processed online, and the quantity of gold which is there for on my behalf stored there will be delivered to me at my home. Now with this, when this physical gold is being delivered to me, so there are, because carrying it is a big risk. So they charge for me for the security. They charge for me from me for the transportation. The other charges they do charge for delivering it safely to me, and it becomes somewhat costlier because additional charges become there because they are picking it from the vault, then security, transportation, and then coming to my house to deliver that thing. Liquidity, it means liquidity here will not come in the form of cash. If you want to redeem it, you can have it in the digital form itself re-delivered at you. Or if they find a buyer, when you just try to sell on that platform, a buyer is available, only they can then transfer the ownership and can pay you. So it becomes a liquidity. Yes, it is there. I won't deny that liquidity is not there, but a certain sort of a complex procedure is there to have that. Either you have the physical gold or let them. And the third risk in this digital gold is the major risk, which I always say, okay, I have to find a partner trustworthy online. If that online platform is not trustworthy, so I think the risk which always we always say is a very, very bigger risk here. So that we have to be continuous monitoring, searching that online partner, okay, whatever he is doing, the things are there, and moreover, the thing which is being delivered to me, although I have paid for the complete purity, but what is being delivered to me, I don't know. Many platforms comes with the certification, that assayer certification, who can basically certify the purity of gold. But many of them will deliver you the same way without any certification. So convenience is there in the digital gold? Yes. Affordability? Yes. Purity as far as still in the vault? Yes. But liquidity is cumbersome, and transparency if it comes with the SR certificate. So all these things from the online platform where you purchase. If the fellow is trustworthy, it is all and fine. If the fellow is not trustworthy, so I will simply say it at okay, you are putting your money at risk. So when we go for gold ETF, vis-a-vis digital gold or physical gold, and we have to consider okay, which form is better, again, I will say it is an individual's convenience or comfort level. But as far as, because I am in this field for so long and I did invest in the, yes, sir.
No, go ahead, go ahead. This is just
So
whenever you
in
want.
this gold ETF, because I invested, I think almost 10 to 12 years, and that quite helped me when I was having that gold, and when I redeemed that money, so that money I could use in the daughter's marriage. So all that was without taxation, nothing like that. I got the money of 24 carat jewelry. I got it purchased from the branded ones, and that really was not an added burden to my finances. It all was already arranged in that SIP ETF for the gold, because that is a major concern nowadays. As far as we senior citizens are concerned, sometimes we also start investing. For remember one thing, there is no right time to invest in the gold. There is no right time, because we know in the last 2 years from where it has shot up, and it may shot up again. But if we are investing regularly or consistently in a way, so at a time when the money is required, we can just go out with 2 grams, 3 grams, 3 units per month when this money is required, and sometime in the medical issues. So for senior citizens, this is the best investment in their asset class. So sometimes when the asset class, the other things which where the money has been invested are not performing to my expectation. So this is the best thing where I can put the money. And I do understand that whatever the portfolio I have created for ourselves, at least 20% of this must go to this. 20% of this must go to this to keep the balance of plus and minus. Uh, yes, sir.
So effectively, I think so far what we've learned is the fact that diversification is important at this stage of life, so that you don't put everything in one place. In the asset diversification, gold does play a role because it's a good hedge against inflation. More importantly, especially during volatile times or during situations like war, which is what is happening currently. Two wars are going around in the world. Is that there has been historically always a rush towards safe havens, and that is when gold prices start going up. Historically, that's why probably you in the last 1.5 year, 2 years, you managed to make those returns. So when you look at all these three aspects, there is some amount of everybody's exposure should be into an asset class which is away from fixed income, away from equities, can be in the commodities, especially like gold. So that lesson learned. The other thing that you're saying is, again, as we always fancy, and especially in our custom, we always fancy whether there's festival, there's marriage, we just go and purchase gold, or when we think about it as an investment, also we land up. It's especially for investment and not for jewelry or not for consumption, which is largely jewelry. You would recommend going in for non-physical form. Now, within the non-physical form, further it is coming out very clearly is there, while there are benefits of the ETF format and there are benefits of digital format. What we understood so far is that one big difference is that big difference between the ETF format and the digital format is that in the ETF format, everything gets converted into cash and vice versa. Whereas in the digital format, you may be getting physical gold when you liquidate. So that's one big difference. But however, there are charges of security, etc., in the digital format, which are not there, and you need to find a trustworthy platform, which are not there in the ETF format. So in totality, what is coming out from what you do yourself personally is that you prefer the ETF route versus the physical, definitely, and even versus the digital for its slight nuances of being a little more easily back into cash or vice versa. But one big advantage that I'm seeing is in this whole thing was between physical versus is that you can start with very small quantums. As you rightly said, there's no right or wrong timing to start investing in this asset class or taking exposure to this asset class. It's always what holds us back with any of these larger physical assets in the past had been the amount that is required to invest. But with the financialization or paperization or digital dematization, if any of those terms are regular to be used, you are it's better to kind of, or it is easily doable in small quantum. So that's, I think, a big plus at any stage. Sunilji, what I think that's where I probably have taken away from your session so far. Maybe what we can just quickly cover is the strategy. I think, Tina, if we could go to the gold ETF versus digital gold slide, which is a comparison, that will give our viewers, everyone, a quick high-level summary of what we've done so far. Can we just go on to that slide, which compares both of them?
Oh, yes, sir. So gold ETF, one major benefit is it also gives you sort of a financial independence. You are not going to get basically dependent financially on someone. You have got your units whenever you are need of money. And the second major benefit is you yourself can sell or purchase online through a stockbroker. As for digital gold, we have to connect with them, but for all gold ETF, we simply can have a password and user ID from any stockbroker, and the things are done when we can go on the platform itself. Now, as you see the digital gold, so vehicle is a mutual fund. Now, how this mutual fund can work? So we have to have first of all connect with an AMC, the asset management company, the fund house, through which we can go here or they can work on our behalf as well. They can work because we have got totally an asset class in which some percentage of exposure goes to them. So it is mutual as well as digital for the sorry, this physical gold. So underlying asset is physical gold, but you will get only the paper gold. As far as digital platform is concerned, here again you will get an acknowledgement, but the gold will be in the vault. Now trading platform is the stock exchange. So you can buy it individually, you can buy it through a fund house, the way you like. You will have to have demat account. Now for opening a demat account, what we need, we most of it, I think you must be having your that account with them. So we must be having a demat account, and for opening that account, we know our ID card, that is a Aadhaar card, PAN card, your photo, and the bank detail and the cancelled check is required. Once that is there, so we connect to a stockbroker or any mutual fund house. So having an account with them, and with that we deposit the money, or we can connect our bank account to that. We simply order is purchased, money is debited, my account is credit. Very simple, and I can do it myself online. Now, liquidity is high in both the cases, but procedure is totally different. As far as digital gold is concerned, you are going to pay the tax, you are going to pay the transportation, you are going to pay the security. So the cost of the returns becomes less, because vice versa, we have to come out with certain costs. Physical delivery in this is not there, because these are the units, and if you want to have the gold, you sell your units in the stock exchange, you get the money, and whatever you want to purchase, the jewelry or physical gold, whatever you can. But their digital asset, you can have it delivered at your home place. The quantity or a partial quantity, whatever you are having, you can have the same delivered at your place. Now, minimum investment, as we are just sharing here, is as per ETF. ETF simply is the 1 gram. 1 gram is equal to 1 unit. So we can go for 1 unit minimum, and we can set up an SIT, so that can be there and can be available in fractions as well sometimes. So if we are putting 10,000, so it can be 1 point something. Now here again digital asset, the same thing is there, but in this, as I told you, okay, the costs are high. Costs are high, and that makes my gold ETF fund much more. And physical gold, as far as stands nowhere, because that simply is a dead money. Simply is a dead money, and we invest. Now, as sir said, okay, when we put it in our asset, the real investment, so it really tries to balance my portfolio. It tries to balance my portfolio. Okay, if something is not performing, this will perform. So that is the beauty of the gold. But in modern days, as far as I am concerned, I'll go with and push up gold ETF, because that is in my hand. I can go online, I can sell it, I can go to the market the way I would like to spend the money. Yes, and I can get the or reap all the benefits out of this. Now, as far as ETF is concerned, now stock, because it is through the stock exchanges, and you know stock exchanges is a regulated entity. So SABI is there to take care of. That is the trust which has developed. Okay, when we are going to buy anything, SABI becomes the responsibility for that. So they have guided, they have made out certain norms, guidelines, and whatever we are doing, they will make it happen to your satisfaction. So, but online platform, as far as that is concerned, there is no regulated entity as well. And that's why I said that when the things may be delivered, may not come to that 24K for which we had invested. I think, yes, Ashwini sir.
So I think we've kind of have covered everything, and let's start opening up for questions. But a quick summary for everyone is so far is that an important asset class to have in our retirement corpus deployment. It is a good hedge against inflation, and related to various other investment options. Some amount of exposure. You yourself personally have kept about 20% exposure, but it depends on each one's risk profile as well as understanding. Regular review of asset allocation is something we highly recommend. Many times it gets set up classes. People have heard that our speakers as well as me saying that very often. And within the asset class of gold, the paper gold or so-called ETF format versus a physical format is highly recommended. And within that, there is the two options where we said that ETF probably stands out a little better. But let me start taking the questions. Just a quick summary for our audience and for everyone over here is that Get Set Up conducts these financial learning classes very regularly. More content is available on similar format at Franklin Templeton Academy India.com, as well as on our app. So download the Get Set Up app, and you'll be able to view these content. Especially if you're a regular member of Get Set Up, you can access a lot of this. So I'll start going by the questions which have come on the chat, but people are most welcome to keep posting more on the chat over here. So one of the questions that Srinath has asked is, are the returns same between fund houses, ETFs? Is there any differentiation between fund houses? Sunilji, if you can comment on that quickly.
Sir, can you repeat the question?
Are there returns same between fund houses if there are two fund houses?
No.
The reason
that's not there, because yes, each and every one has got its own way of investing the assets in the different assets. So sometime they may buy asset at a higher price, sometime at a lower price. So that benefit goes pro rata. So there will be a difference, not much, but yes, different will be there.
So the understanding here is that because the underlying asset that the fund house is investing is in gold and it's directly linking to the gold price, there should not be ideally any difference between the returns, because it should be tracking. Where the difference, if it may be there between fund houses, probably is the expense ratio or anything that fund houses overlay as costs. Those may be probably the only reason that there could be, but as Sunilji said, there is very minimal.
For an example, suppose I say return someone is giving 21.6, other may be giving 21.5, and another may be moving to 21.65. That is the minor difference.
So that should clarify Srinath's question. Beena Bayaniji is asked that, do we get lesser money if we sell old ornaments as these are not being used by the family, but if one has to distribute in family members? Very interesting question to something that we started off with, physical gold, especially in ornament formation. So is there any chance of getting lesser money if we sell old ornaments? A comment that you can make, but I think it's more for a jeweler or somebody who's a valuer. But Sunilji, what do you think?
Simple thing is, when it is a physical gold in the family and there is something, the legacy has to be passed on. So wealth tax comes in between, and there are so many conflicts in the family members there. Because for physical gold, there is no nomination, sir. But as far as this, you can put your nominee, and nowadays in this, you can have 3 nominees in the demat account, and you can even share 20% will go to this, 30% will go to this, and that too without any wealth tax, sir.
Okay, so I think the interesting part is that she would probably be wanting to convert all of it into money and then distribute it amongst, because that's probably an efficiency form of since there can't be any nomination and you can't break an ornament into the number of people you want to distribute it into. So is conversion of money. I think for that the best answer would be to get it valued and then take a call. And it old and new, it should not matter, because it's always on the content of the gold in the jewelry and the carat, and then the jeweler can probably give you a best estimate of what money it would generate into. Another question Srinath has asked, that is there direct and regular ETF? If I may understand what the question could be, or maybe Srinath, you can unmute, and if you want to ask that, my understanding of that question is that is there any difference between direct investment versus investment through probably a regular investment advisor? Is that the question? I didn't quite understand the question.
Yeah, in the mutual fund, there is a direct investment and regular investments. So whether in gold ETF, is there a direct and regular?
Sir, it is both available. You can go through an advisor and you can yourself can invest in through the exchange rate, through the AMC.
Or through the MC?
Both ways,
So,
both ways are open, sir.
so which are the best gold ETF apart from Franklin
So
Templeton?
so you will have to go to the site and just search out. We people are dealing in that, and you can find out the returns as far as, and as sir has already told you, we are into this business for the last 28 years.
Uh-huh. So which site we have to visit to get the returns?
So sir, please share the website, sir.
Yes, Srinath, the best way to probably compare funds is there are many publicly available sites. You can just type in your Google search for comparison of mutual fund schemes, and within that ask for gold ETFs. It should throw it. Value Research is one of the institutions, if I recollect, is a very old one. They compare various schemes across fund houses and give you both current differences as well as over tracking over a period of 1 month, 3 months, 3 years also, and sometimes even longer than that. So that is one site you can probably check out. I think even Association of Mutual Fund site called Amphi, that also should be able to give you comparison of various schemes, and that's the industry body, so that's also collecting data from everyone and giving you that same information. So any of these, and then of course you can, any financial advisor, Money Control also I think has compared. So there are many other available, and they are all taking the data from the same NAV that every fund house announces every evening or displays every evening. So it shouldn't matter which one that you start regularly using to track your returns. But any of this, we always recommend, if you're doing it on your own, you should be experienced enough to keep tracking your portfolio. If you had in the past, if you've attended our classes, but we do regularly inform the same thing, is yeah, we'll put it on the chat right away, a few of the suggestions. But if we always say that use an investment advisor, whosoever you may trust, but somebody who's knowledgeable, is especially for people who have not had the experience or are first time investors, because we all can tend to make mistakes. And ultimately, it's the markets, and market there are experienced advisors, as well as the fund houses are probably one of the best way of doing it if you're a first time, because it's a daily job of the fund manager to allocate assets. So within the fund houses, you can kind of choose an asset classes across multi assets or gold assets or equities or fixed income. You can choose all of those. That's something we cover regularly when we talk about asset allocation as well. That's a good site which is completely should be non-biased. Which is most of these will be always non-biased because it's actually information providing. NSEindia.com products. So that's a good website to check. If any other does that help you answer, Srinath? You got your answer?
Yes.
Anybody else who have questions? We have probably another 5-8 minutes in our time, but while people are still thinking what else they can ask, or if they can put it on the chat. But that's popped up a question. Sushil is asked, is SWP available in gold ETFs, systematic withdrawal plan? So Sunilji.
Now, as far as SWP is concerned, so SWP is when you are withdrawing certain money out of your kitty. Now, suppose you are having say 10 grams of unit or 10 units in your kitty, so you can give them instructions. Okay, each and every time you can dispose of one unit and give me the money. So it will work like other mutual funds are there. So they can just simply dispose it off that unit, and whatever the rate in the market that comes to you after deduction of that brokerage, and that will be available to you in your bank account. So it, yes, SWP works in that also.
So Sushil, yeah, SWPs do work in gold ETFs. So while some more questions may be coming in, Sunilji, one of the things that in this conversation probably, and one of the reasons for putting this topic across recently is some
The
of
simple thing, as I shared, I can just again summarize the things, because the physical gold is not giving me any return. It is lying in the my vaults or the lockers, and moreover, we are paying the charges without earning anything. But to have the same thing, that too in paper, but basically it is again a physical, we can invest it there and get the returns in the shape, and whenever the money is needed, it can straightly be disposed of without any hassle, without any difficulty, in a click. And now moreover, the settlement periods in the many commodities have been reduced. It was T plus 1, but very soon we will having it T plus 0. So any trade which has happened up to 12:30, you can get the money the same day in the evening. So we people are working on that as well, and you will get that liquidity. So that is the best part. As far as the digital gold is, as I shared with you, again, it is a good thing, but platform should be a trustworthy one. Otherwise, the things may go wrong sometimes. So as I always say, that this is the investor's own choice to assess the risk, or what risk they can go with, what risk they can tolerate, or they are really working to beat the inflation, taking it as an inflation hedge, or reducing the cost of their investment. Yes, gold ETF is the best as far as I am concerned.
Which is the
so,
best gold ETF, sir?
Gold
I,
ETF, as sir told you, you
I think
have to
I,
basically research on the value research website.
so
As per you, sir?
I'm interjecting over there. We do not recommend any specific fund, sir, because each one's risk profile is different.
Brent.
Hence, we would not recommend any one. Sunilji likes something, I may like something. It's mainly because of each one's risk profile and asset allocation. So we would suggest to probably check out any of these sites, and more importantly, look at the historic performances. But always, history need not repeat itself. So again, we always recommend an investment advisor or a consultant that you trust, or within the family or outside, should be somebody that you should be using to decide your asset allocation. Somebody who can analyze your risk profile based, who knows you better. Just like we would for our health, we would go to a doctor. For our finances, we should
Best example, sir. Best example.
So I think in summary, we've kind of come out quite clearly on asset allocation strategy, and then some in terms of, okay, this is an interesting question. Somebody just put directly to me, is that what is the full form of ETF, and how is it kind of probably even different from regular funds? Maybe
This is exchange traded fund. The question rises sometime ki all the things are being traded on the exchange. So why this has been specifically told as ETF? Now in the exchange, when we are investing or creating a portfolio, as far as mutual fund is concerned, so there are many asset classes. But here it is, asset class is only one, that is a gold. And another name for the gold ETF is a passive fund, because once the funds are invested, we are not disposing it off or purchasing or on putting it on hold. That is once purchased, and it is the investor decides when he is to dispose it off or what further he has to invest. So that is why the index funds, the certain knows bet, and the gold ETF have been put in the same category. Once it's invested, they remain invested in that to make it a separate cadre in the asset class. That is why it is known as ETF.
So the biggest difference is of an exchange traded fund, an index fund, and a regular fund is the difference in being that, or a regular fund versus an exchange traded fund, is that you, just like a stock price, you buy it at that same very price. So if you trade on a ETF or you buy an ETF or you sell an ETF. So if you do it at the 1 o'clock price, it'll be the 1 o'clock price. Whereas a regular scheme of a mutual fund, it will be the end of day NAV that you will get. So during the day, if there's multiple volatility, you will probably miss out on either side and get what is at the end of the day the price or the NAV of the asset is. Whereas in an ETF, a 10 o'clock price or a 4 o'clock or a 3:30 price, the two may be different. So it is at the strike of that you will be getting in an ETF. That's one of the biggest differences between a regular fund and an ETF. I think we have a price question,
So, sir, first of all, you display the last one, the last slide.
Is the diversification is already displayed, sir?
Last, sir.
Yeah. Okay. Sorry, Tina. Yeah. Please change. Yeah. So I think that's an important one. This is that all information contained is for general purpose only and not a complete disclosure of every material fact. So securities and investments are always fraught with risk. So please always please take full responsibility for your own decision taken on the basis of this article or this class that we just had. I think we'll keep that slide on. But what we like to do is as a parting shot, just ask one last question and ask the audience to kind of just put their answers in the chat. And there is a surprise raffle at the which will be communicated to you just after this. So can I ask this question right now?
Yes,
Okay.
sir. Yes, sir. Please go ahead.
Yes.
So Abhijit has prompted me to ask this question for the prize, which is, what is the full form of NAV in mutual funds?
NAV stands for the net asset value.
Sunilji, this is not a question for you. This is
okay.
As a prize. So please.
Okay, sir.
Yeah. So Abhijit, I've asked the question. You can put it on the general chat and let everybody answer. So we have a few participants putting a direct message on the chat, but that's fine. That's acceptable as well. And we'll gather that and send it across and engage with you all. Okay. Oh, on the public chat also answers are coming in. Okay, lovely. While people are just typing the answers, just as a parting shot, Sunilji, thank you very much for once again enlightening us and our members. Our members, please download the Get Set Up app for more content like this, including this class is recorded and will be put over there. So you can access this information whenever comfortable. Also, do visit the Franklin Templeton site, which has lots of such content on learning, which is the Franklin Templeton Academy India.com. As well as keep coming back for more financial health and other enrichment classes that Get Set Up does. If you download the app, you can see the entire portfolio that we keep conducting and join in various physical activities that we keep doing, including our travel and gatherings that we keep doing. Okay.